And let's just start with the decision to do this, and especially those 5 days starting next year, because you're getting in front of an issue that governments are starting to tackle in the form of sick days. Paid leave is an issue that is going to be a hot topic. We know this in Canada. What brought you to this in this way?
Well, firstly, Amanda, thanks for having me on today. It's great to talk to you again. So throughout the pandemic, our top priority has been the health and safety of our people. And during these challenging times, our people have just done an amazing job to support each other, and in doing so, support our customers. So to recognise this effort, we declared June the 19th as a global thank you day. And this day is designed to give people an opportunity to take a day off, rest, relax, and recharge their batteries. We've also, as you highlighted, awarded all of our staff 5 additional personal days in 2021. And it really is a function of the fact that we're seeing that people are really putting in an incredible effort in incredible circumstances. And we want to make sure that their health and safety and their well-being is a top priority and is something that we're focusing on as we navigate this situation that we're in.
Roy, what kind of claims are you getting related to the pandemic, and what kind of claims are you getting that are not related to the pandemic? So sort of what you would normally get in quote-unquote normal times.
Yeah, so we watch very closely a lot of key indicators, and we like to look for trends that might be emerging as we sort of see this situation unfolding. And as we think about the crisis itself, there are really 2 orders of impact. The first order is primarily around claims and sales, and then the second order impacts are revolving around the market impacts of interest rates, currency, equities, and so on and so forth. So to date, we haven't seen significant uptick in claims. We've stress tested our portfolio, and we feel that we'll be able to navigate the situation specifically as it relates to claims. But still very early days, and we're going to be watching this very closely, and we want to make sure that we keep a close eye on how this situation unfolds, and that we want to be prepared to navigate the situation as best as possible.
We did see, obviously, your first quarter hit by the pandemic, and especially the capital market disruptions. Was there any learning in that in terms of how you were positioned in the market? And I say that, in the context of nobody knew a global pandemic was coming. But do you look at it and say maybe you structure things a little differently?
Yeah, so one of the things that we were very focused on as we actually entered the crisis was the focus over the last decade to de-risk our business and to reduce our sensitivities to market movements. So we put a lot of effort over the last decade to really ensure that we had the strong foundations in place. Not that we foresaw this situation eventuating, but we really put a lot of effort to make sure that we de-risked our business. And actually, over the last couple of years in particular, we took further steps to strengthen our balance sheet. We freed up $5 billion worth of capital. We reduced our leverage ratio quite significantly. As you highlight, we announced our Q1 results recently. We saw solid results given the circumstances. Our net income was $1.3 billion. Sales of about $1.6 billion were about 10% lower than last year, and our net flows were actually very solid, again, given the circumstances. So it really went a long way towards demonstrating the strength of our franchise and the benefits of global diversity. Having said all of that, though, I expect Q2 will be very challenging, very tough, a lot of headwinds. And I think, quite frankly, the next 12 to 18 months are going to be incredibly challenging for our industry and, quite frankly, for other industries. So I think the most important thing that organizations like ours need to be focused on is anticipating how this will evolve, stress testing our business for those different eventualities, and making sure that we're prepared to be able to navigate those different circumstances to deliver acceptable business outcomes.
What are the challenges that you're most dreading, Roy? I mean, we don't know if there's going to be a second wave, for example. If there is, we don't know what it will be a factor of. Is it that the first wave never went away, for example, or will it be, a reigniting of the pandemic? Would that be a major challenge for you? And what else is out there?
Well, that's a great question. And I think the biggest thing that's on my mind is how the global economies will rebound, and how long, quite frankly, will it take for the global economies to get back to pre-COVID levels. So I think on that front, we've seen the early response being very robust. We've seen governments step in and provide significant fiscal stimulus. We've also seen central banks around the world take significant action to ensure that there's sufficient liquidity available. So on that front, I think we've seen a lot of tremendous effort, which has been very well appreciated. The ultimate turning point for this pandemic will be the at-scale deployment of a vaccine. And whilst we've seen some encouraging signs, and perhaps more recently so, I still believe that we're going to be at least 12 to 18 months away from an at-scale deployment of a vaccine, which basically therefore means that in the meantime, we have to be very cautious and we have to reduce the risk of second waves or third waves. So my biggest fear is that we get complacent. And to that end, I think we need to make sure that we're continuing to socially distance ourselves from others. We need to continue our efforts on testing, contact tracing, and ensuring that masks are deployed as much as possible. So for me, the biggest risk is that we get complacent and that we believe that we've seen the end of this, but we're really far from that.
And we don't have a lot of time here, Roy, but obviously everybody's hoping that we're close to the end of it. There's a concern about the wave of bankruptcies that could be coming our way. What's the sort of default risk in your portfolios as far as you're concerned? I know they're mostly investment grade. Are you worried about some of those turning over on you?
Of course, we're worried about those things. As you highlight, a significant portion of our portfolio, of our fixed income portfolio, is investment grade. In fact, 98% of our portfolio is investment grade. So again, from our perspective, we've taken a very cautious approach to the way we've invested our funds, and that will be continuing to be the philosophy that we apply. But clearly, the impact of this pandemic is going to be far-reaching. There are very few industries that are going to be able to navigate the situation without a significant impact. And the impact largely is that of demand. So whilst we're seeing a lot of effort going into how do we get supply back, demand is the bigger concern from my perspective. And I think as much effort that's going into ensuring that supply comes back, we have to put effort into the demand side of the equation, which again is a function of confidence. So that the translation of all of that is that we're going to see demand again continue to wane for some period of time until people are ultimately confident that they can interact in the way that they were previously. And until then, companies will struggle and will need to tighten the belt so that they can navigate the situation as best they can. And clearly, there will be many organizations that will struggle to navigate the next 12, 18, and maybe even 24 months.